Welcome back, everyone. Listen, if you're a focused learner looking to truly grasp the absolute massive trillion-dollar engine that's moving international money every single day, well, you are in exactly the right place. Today, we're completely demystifying foreign exchange, or as you probably know it, Forex. We are going to break down this vast, ever-evolving market that silently impacts our global trade, our investments, and literally entire economies. So whether you're interested in international finance, maybe looking to diversify your portfolio, or you just want to understand the hidden forces shaping our world, this explainer is going to make it clearer and highly actionable. Let's get right into it. Okay, here's our visual roadmap for today. We're using a structured macro to micro approach. We'll start with the mind-boggling $6 trillion market, look at how currency exchange actually works, explore the functions of Forex, break down the three distinct markets, and finally help you navigate your own trading journey. Section 1. The $6 trillion market. Okay, let's dive into this and set the stage for understanding the sheer, massive scale of global trade. $6 trillion. Think about that for a second. To put that completely astronomical number into perspective, that is more than the entire annual GDP of Japan. And it's traded every single day. No exaggeration, this makes Forex the absolute backbone of global trade. It's the largest, most liquid financial market on the globe. When we talk about global finance, Forex is the undisputed heavyweight champion. So the crucial point is that this massive size guarantees what we call high liquidity. And look, in the financial world, liquidity just means how easily you can buy or sell an asset without drastically tanking or spiking its price. Because there are trillions of dollars moving constantly, there's almost always a buyer or a seller instantly available for your trades. It's what allows everyday individuals, giant corporations, and massive governments to seamlessly trade currencies worldwide without getting stuck. Moving to Section 2, how currency exchange works. Let's take a step down the funnel and look at how the daily gears of this market actually turn. Now, the most fundamental concept you really need to wrap your head around is currency pairs. You see, in Forex, you're never just buying a single currency in a vacuum. Nope, currencies are always traded in pairs. Think of the US dollar and the euro, or the British pound and the US dollar. The whole mechanic is a simultaneous transaction. By purchasing one currency, you are intrinsically selling the other at the exact same time. Basically, you're placing a bet on the value of one currency relative to the other. Now, what's really interesting about this slide is the stark contrast between Forex and what you might be used to. Unlike stock exchanges, say the New York Stock Exchange, which operates out of a centralized physical building, Forex is a totally different beast. It is a completely decentralized global network of banks, brokers, and financial institutions. There is no single central location where Forex lives. And because it relies on this worldwide decentralized network, rather than a single physical building that rings a bell to open and close, the market stays open 24 hours a day, 5 days a week. When traders in London are logging off and heading home for the night, Tokyo is just waking up, and the market keeps moving seamlessly. It means traders anywhere in the world can jump in around the clock during the work week. Section 3. Functions of foreign exchange. Let's shift our focus to the practical applications and explore why this market is an absolute necessity for the global economy. This brilliantly illustrates the market's 4 critical functions. First up, currency conversion. This just allows businesses to swap money for international trade. Second is hedging, which is all about protecting against risk. Third, we have speculation, where traders actively try to profit from market movements. And finally, price discovery. This immense market is what actually determines the real-time value of global currencies. Let's bust some financial jargon for a second and look a little closer at hedging. Imagine you're a business owner buying materials from overseas. A sudden, unexpected shift in currency values? That could literally wipe out your profit margins overnight. So hedging is how businesses use the Forex market to protect themselves. By locking in rates or taking specific positions, they ensure stability against unpredictable price fluctuations, no matter what the broader market is doing. Section 4. The 3 Forex markets. Let's move to and see how this builds into the specific arenas where these trades actually happen. So these transactions basically take place across 3 distinct markets. The most common one you'll hear about is the spot market. That's where currencies are exchanged immediately at today's current price, done and dusted. Now, if you want to lock in a price for the future, you'd use the forward market, which uses customized contracts. Or you can use the futures market, which also deals in future dates but uses standardized contracts on formal exchanges. And finally, Section 5, navigating your trading journey. Let's zoom all the way down to the micro level and look at how everyday individuals enter this massive system. A key concept you're going to encounter right out of the gate is leverage. Basically, leverage lets you control a huge position in the market with a relatively small amount of your own capital by essentially borrowing the rest. But please consider this a highly important warning. Leverage is a powerful double-edged sword. Yes, it can dramatically amplify your potential profits, but it equally and ruthlessly amplifies your potential losses. It requires strict risk management for sure. So, with those risks clearly understood, why is learning Forex so incredibly valuable? Well, it offers significant profitable opportunities thanks to that high liquidity and 24-hour access. It also teaches you the economic impact of global events on real-world businesses. It's fantastic for portfolio diversification, and honestly, perhaps the best part, it's accessible to everyone. Platforms today cater to everyone, from absolute beginners to seasoned pros. To succeed, though, you really need to understand market sentiment. Remember, currency values fluctuate constantly. To predict those constant movements, you have to pay close attention to the global economic trends driving the market's overall mood. We're talking about heavy hitters like inflation data, central bank interest rates, and national trade balances. Knowing how these shift market sentiment is absolutely vital for spotting opportunities. So what does this all mean for you? Which brings us to our final provocative question. Are you ready to enter the global market? Look, Forex is vast, it's ever-evolving, and it can be incredibly lucrative if you put in the time to really understand it. Your next step is to choose the right broker that actually fits your needs. Keep educating yourself, explore resources like foreignexchange.live to stay updated, and just keep building that knowledge. Thanks so much for joining me on this explainer, and I'll see you on the next one.